Time for another stock review. This time we are talking Worksport, WKSP. And it does come with a bit of a warning. So let me just click on there. Not meeting listing standards. Can you see that there? Look, the security is not meeting the standards of the NASDAQ and the New York Stock Exchange. So it's in danger of being delisted. And that in itself is a potential 99% chance you shouldn't be buying the stock anyway. There's so many opportunities out there. You've got to be buying companies that are at least abiding by the regulations. Otherwise, you're already in a 99% chance of failure. And also, as I just discovered, it's a product more than a company. And there's a big difference between being a company and being a single product or a line of products. And it's very important that it's very different. Anyway, we're going to cover this earnings. It was requested by one of our members, Vincent Vosberg, actually. And it's interesting, though. It's an interesting product. But remember, any product like this can be either ripped off, knocked off by somebody else, and we find ourselves, this company have no value all of a sudden. It needs to have its patents and patents in order. Patent, UK, US, bear with me. So as long as it's got those things in place, maybe it's got some protection. But anyway, in this review, we're going to give you a full analysis of the stock. We're going to look at the news, the balance sheet, the profit, the loss, who's buying on the inside, who's selling on the inside, can you make money from this stock, all the rest of it. So please do tap the like button, leave me your comments below. Also, perhaps you might like the CEO of the company on the show. You can get them on the show. We have a Meet the CEO series. Full disclosure, I don't own this stock. I don't own any stock other than the S&P, so you know my views are genuine. I'm not sponsored, paid by anyone to represent the company and promote the stock. I'm just here to give you the facts as I see them. So let's get straight into it without further ado. So what is this company? It took me a few moments to kind of work it out what it was, but I kind of got it now. So anyway, look at the line chart here. It's just been downward since it came out, 2021. It supports EVs, but EVs have had a decline recently, so it's no surprise the stock IPO'd and then just fell away, and now it's all the way down at 54 cents. So what is it? What is Worksport? And by the way, it's only been out since 2021, so it's very new, young company, of course, right? Worksport engages in design, development, manufacture, and owns the IP on a variety of tonneau covers, tonneau, however you pronounce that, solar integrations and non-parasitic hydrogen-based green energy solutions. Okay, the firm's businesses acquired investment capital for continued growth and expansion while providing business development and marketing strategies and offers its services in the United States and Canada. The company was founded by Steven Rossi on April the 2nd, 2003, and is headquartered in West Seneca, New York, and listed on the New York Stock Exchange back here, as you can see, in 2021. Now, I would love to have the CEO on the show. That would be fantastic to have Steven Rossi on the show. If you'd like him on, look below in the description of the video. You'll find the invite the CEO video. Send it with this to them, either through email, a link, create a group around the stock and let them know about it. If you create a group around this stock, I will provide you with earnings and news and updates. I'll support it. Stock like this, I'm sure will rank number one on YouTube. We do for most of the stocks that we cover. So I'll be more than happy to do that. Email them, email investor relations when Steven responds or whatever. Put him in contact with me and I will arrange for them to be on the show. But it would be fantastic. I'll leave that with you. I don't approach anyone. Don't sell my services. I'm just here to help if you require it. All right, from New York, 2003, margin requirement 100%. If you're buying it on margins, regarded as very high risk, no surprise, no dividend here, very low volume, not much volatility, which means you might not be able to sell it at the price you want. Things can always go down, even if it goes down to 1 cent. There's always 100% left in 1 cent, remember. Things can always go lower. Negative, it's losing money, it's expensive, it doesn't make any money. 52-week low, 36 cents. 52-week high, 4.33. Okay, scrolling on down, look at the earnings, kind of going sideways. That's kind of better than going continually down. It's beaten earnings, it's missed earnings, it's beaten earnings, it's missed earnings. It's a sort of a mixed bag here. The last earning was expected to lose 19 cents a share, and in fact it lost 18 cents a share. So it did have a slight beat and slight improvement of Q1 of 24. That's good news. Who does it share investors with? Lucid, one of the worst companies there is, one of the best cars, but I'm afraid Peter Rawlinson has taken all the money for himself and paid himself $500 million a year and basically destroyed the business. It just keeps losing money to pay him. I think the shareholders should be furious with a company that was once upon a time $40, $50 a share and now only worth $2.79. It's just because he took all the money. I'm amazed it still carries on like this. Nikola had a terrible past, but much better now. They're still struggling to get their stock price up though. Rivian, a much better company, but very expensive though. Remember that $170 down to $10. Oh my gosh. ChargePoint, Workhorse, Fuel Cell Energy, some interesting stocks in here, but as you can see, virtually all penny stocks. So very volatile. The people that buy these sort of stocks pump and dump. Remember, I don't own any stock other than the S&P, so you know what I'm saying is true and genuine. There's no analysis review here. No one's really covering it. That's always a bit scary. But at the same time, a small cap like this, we can move it. It's a little bit big for us to move. We're only a small channel, but we're growing 1,000 subscribers a week. Market cap of a million, we can move the stock. You can literally see it move with our investors buying it. But one of this sort, no, we can't really. We can rank for it and get attention to it, but that's what we can do. Anyway, we're not here for that. We're here to help people, though, for you to make money. I'm just here to give you information. Let's talk further about what the company is. Tap the like button, subscribe and ring the bell. That helps the video out as well. So let's take a further look at Worksport. Okay, let's first of all go over to the chart. You can see how volatile it's been recently. We've also got a review here. This is from Seeking Alpha. So Wall Street are giving it a buy and Quant is giving it a hold. And so you've got that. Also, let's look at the latest news. This is only out just a few days ago. This is their Q1 results. Worksport reports a 1,506% revenue increase in Q1 of 24 versus Q1 of 2023. So that's good. However, I would imagine things are now turning downward because people aren't getting as many EVs, right? Anyway, gross margins were largely based on private label sales and are expected to improve considerably in future quarters. So that's what they're saying about going forward. Now, let me show you how it compares to the S&P. If you had $10,000 in the S&P, you would now have, since the date range is from 2017 to today, all right, you would have 25,000. You'd have doubled your money. Remember, the S&P doubles every 7 years or thereabouts. 25,000. Worksport, you're down to just under $2,000. So not very good. But what you can see is it had this massive spike here, which was May 19th. If we look at the date there, May the 19th, 2019, just before COVID. This was around about the time everyone was talking Tesla can go on forever and ever and ever, and everybody was buying everything EV based. So just bear that in mind. I don't like any stock which has volatility like that and then dump straight back down again. And since then, you can see it's been well underperforming the S&P all that time. So there you go. Right, now then, what is it? You want some more information what this is? I was struggling at first to work out what it is, but it provides these covers for vehicles, EVs, that are solar powered. So you can provide extra power to your EV from your cover for your truck. Sounds quite good, right? Off-grid clean energy with tough reliability. EV pickups of the future will drive on solar power, and normal pickups turn into off-grid driving power stations for camping, work, sports and emergencies. Worksport's powers your life off grid. Now, my experience of looking at product businesses, and what I mean by that is a company, you often see this on Shark Tank, where they will say things like, you are a product, not a business. A business is one thing, and a product is something else. You design something, but you've not yet built the business. The business isn't making any money, or you've just got a great idea, but now how do you turn that product into a going concern, a business? I think that most EV companies like Tesla, for example, can do this themselves in a much more integrated system. They can put their covers on, they can make them solar powered. I mean, they're already they can be pre-wired in. You don't need this accessory to add to it. Maybe they don't want to, but I'm not a fan of products. I like to buy companies. And is this a company? Is it able to produce stuff and make it itself and make a business from it? Or is it just a product which then someone could just buy the rights to and integrate it into their own systems? I don't think that Tesla would need to buy someone's solar powered, roof for its cars, for example. They know how to make roofs for their cars, covers. They know how to make solar panels. They could probably do it themselves in a much more efficient way. They wouldn't need to just plug in an extra bit. So I'm not really a fan of this kind of thing. I've got to be honest. All right. I don't think it's the way forward. Let's have a look. So you can power your truck. Look, you've got all these little boxes and powers and all this stuff. Again, it sounds great, but it's a product. Again, surely you could just power off the EV itself. You can do that off a Lightning. You can do that off a Cybertruck already. Can you do it as well as this? I don't know. But anyway, that's what it looks like. A product, a solar tonneau cover to power pickup trucks. Worksport invented and manufactures off-grid energy solutions that are made in America. The flagship product is the Solace solar tonneau cover with the COR battery system. So there you go. You see what it is. It's a cover which then is solar powered and so on and so forth. Sounds great. Sounds the sort of thing you'd pick up from a car, a car accessory shop. But I'm just a great believer in that it could be bought out very easily and provided by the car company themselves. I don't know. What do you think? Anyway, let's have a little look here. This just came out. Worksport, a key-based manufacturer and innovator of hybrid and clean energy solutions for the light truck, overlanding and global consumer goods sectors, today reported the financial results for the first quarter of its fiscal year Q1. Worksport reports a 1,506 revenue increase versus Q1 of 23, while cutting 4.8% in operational expenses over the same periods. Gross margins were largely based on private label sales and expected to improve considerably in future quarters. Worksport will provide forward-looking guidance on May the 23rd. We just heard about that. They're expecting good growth going forward. That'll do from there. Let me now jump into the actual numbers we've got here. All right, so let's go and have a little look. So if you like this video so far, please tap the like button and also consider subscribing to our channel. If we look at the valuation of this company, which is regarded as undervalued because it doesn't use DCF valuation, we're valuating this at 13 cents, so 76% overvalued. People are excited about it, but it's nowhere near what it used to be, right? Worst case scenario, 78% overvalued at 11 cents. We're currently running at 54 cents right now. Remember, just because something is cheap doesn't mean to say it can't go, a lot lower. So just bear that in mind. Let's move on down. Let's have a look now then. 2 million revenue, very small company, very small. The most recent range, March 30th, just gone. We were up 32% on revenue, 2 million. And we're expecting this really big S-curve. Now, this comes off, of course, then the company are in a nice position. Operating income is negative of 0.8 and going sideways for a while and then improving. Net income is down 0.1%. Financing cash flow up 73%. That's a good thing. Investing cash flow is down 25%, which is a good thing. Operating cash flow is positive, up 1%. Okay, let's have a look at the balance sheet. What's the balance sheet looking like? 27.3 million in assets, of which 3.5 is cash. Okay, not bad at all. Only 8.4 million, so 8, 16, 24, about a third of their business is in liabilities. Short-term debt is to 5.3. We don't have any long-term debt, of course, yet. It's quite a new company. 5.3 million is in debt out of the 8. So that's short-term debt is 63% of their business already. And obviously, it's not long-term debt yet because it's only a new company. But already, 63% of their liabilities is debt. Okay, but there's a third, 3 for 1, if you like, comparison between liabilities and assets. So it's not going to be a terrible balance sheet, but I don't think it's that good either. All right, so it's not littered with money. It's going to want to probably dilute. It's going to want to go to the shareholders, raise more money. It's a product business. It's not one for me. I'll tell you that straight off the bat. 13% gross margins. So not massive margins. Operating margins negative, net margins negative. All these are negative at the moment, right? I bet the balance sheet isn't very good. Let's have a look. Profitability score, 23%. 23%. So it's a low profitability score. We got ticks for everything apart from declining ROE, all right? So what about the solvency score? Is it going to go bust? 40%. Is the solvency score. So it's not awful, like I said, but it's not great. Positive net debt is negative, and long-term solvency could become a thing soon. So it's not a great balance sheet, but we've seen a lot worse. We've seen a lot worse, actually. But Wall Street like it. Wall Street like this. I'm not really a fan of this kind of thing. I've got to be honest. I just think the company can do it themselves. But who knows? Maybe, it's like would you want to own iPhone or would you want to own the company that make the cases? I don't think they're great business. They're smaller businesses are okay for those that work there, those that pay themselves the wages. But for an investor, would you want to invest in an iPhone case company, for example, rather than iPhone? I wouldn't. I don't think it's an investable proposition. I don't think it's good for the investor. Anyway, but look, 170% upside, 178 worst case scenario, 181 or 189. You might notice that all three are very similar. From worst case scenario to best are all kind of similar. So just bear that in mind. So, from worst to best is the same, really. Insiders aren't buying or selling. Okay, well, that's kind of, they're not selling or buying. We've got no real short interest, 0.87. So no downward pressure, just nobody buying it. But the good news is it's a small company. We can move this stock potentially because there's no sentiment. There's nothing. It's all neutral. There's no news, there's no reviews, no one's covering it, so my review will come down here. Very little information, very little interest in it. So a good review could be all it needs. A bit of information about it, get people to talk about it. Worksport could be good, but I can't give it a buy. I don't think it's got enough cash. I don't think it's got enough money. It's got some debt. It's going to need to go to shareholders. It's going to dilute. Its margins aren't great. I don't think there's a need for it. I think there's a need for it, but I think the company will just do it. Do you not think? So, Tesla's going to go, well, we can put solar panels on our cars. I mean, I just think you can already do it. I don't know if it's a business. I think it's a good product, but it's not a good business. So let me finish up this review. I don't think it's got a great business at the moment. It's going to need to go to shareholders. It's going to need to dilute. They're saying they're going to do better in the future. Their profits are very, very low. Their solvency is okay. It's not going to go bust anytime soon. It's not. Short-term debt will turn to long-term debt. But then if rates come down, that could be good. EVs is in a slowdown at the moment. EVs is going to re-accelerate when rates come down. Maybe they'll get a boost. But I just think maybe the companies themselves could make their own products their own accessories. You could buy, you know, a solar paneled roof, a cover or whatever. I just don't see a need for this. But then, you know, I mean, there's always going to be people that make iPhone cases, but you wouldn't invest in them, would you? You'd invest in Apple. They make their own cases. Do you know what I mean? It's a smaller business. I don't think it's an investable business. So there you go. There's Worksport. Click above my head for all the links, and if you want the analysis software you can use, you can get that. My members get a free version or a premium plan with a discount. Down below in the description, you'll find all the links to Alpha Spread and everything else, and all the rest of it. Also, meet the CEO. Maybe you'd like to email the CEO and get them on the show through investor relations, or create a group around this. I'd love to talk to them where they really see the business going. Obviously, you know, they think it's going well. I'd love to be convinced of that. And maybe I could come back and re-review it and say, yeah, it's a buy. I just don't see it right now. Anyway, over here, I'll put all my reviews. I've done nearly 200 reviews now. And down here, I'll create a playlist for Worksport. And as I add more reviews and more news, I'll put it in there. If you want me to cover the earnings or latest information, let me know and I'll cover it. There you go. Until next time, as always, take care of yourselves and each other.